Good evening, everyone. Today I would like to give a lecture on how to write journal entries using golden rules of accounting. The first stage in accounting cycle is journal book. In the journal book, we need to write journal entries. How to write journal entries in the journal book? With the help of the golden rules of accounting. There are basically three types of accounts are available. One is personal account, a real account, nominal account. So personal account golden rule, debit the receiver, credit the giver. Real account golden rule, debit what comes in, credit what goes out. Nominal account golden rule, debit all expenses, losses, credit all incomes and profits. So when you observe any other business transaction, minimum one account, maximum two accounts are involved. For example, goods purchased for cash, furniture purchased, computer sold out. In these transactions, first case, goods purchased for cash, goods, that is stock, is an asset that comes under real account, and cash is also real account. Only one account is involved, that is real account. So we need to apply real account golden rule. Next one, cash deposited in Axis Bank. In this transaction, cash is real account, Axis Bank is personal account. So we need to apply two rules. One is real account, another one is personal account. Next one, salaries paid through check. Again, in this transaction, two accounts are involved. One is salaries, that is nominal account, through check. Check means we should write bank, so that is personal account. So we need to apply nominal account rule, personal account rule. So how to identify the account? When you read the transaction, how to recognize the account? It is simple to recognize the type of account. Suppose personal account. It includes natural persons as well as artificial persons. The names of the human being and the names of the companies, banks comes under the category of artificial personal account. After recognition of the account, we need to apply the personal account golden rule. That is, debit the receiver, credit the giver. Similarly, real account. Real account means the assets or the properties of the business comes under the category of real account. Say cash, land, furniture, vehicles, computers, furniture, etc. These comes under the category of real account. After recognition of this account, we need to apply real account golden rule. Debit what comes in, credit what goes out. The last one is nominal account. Expenses and losses. The expenses to the organization like rent paid, salaries paid, commission paid, discount allowed or discount paid, bank charges paid, stationery or postage charges paid. All these are expenses. And moreover, when you pay the money from your pocket in the form of expenses, you cannot get back it. Rent you paid, once you pay the rent, you cannot get back it. Commission, once you pay it, you cannot get back it. Salaries, once you pay to the employees, you cannot get back it. So that is the outflow of cash. The outflow of cash, you are receiving the services, so in return you are paying the cash. So that is expense. Incomes, there is an inflow of cash other than trade. Other than trade, if you are receiving any incomes in the form of rent, you have a property and you are getting income on that, and you are promoting other businesses, you are getting income, commission on that. So you have deposits and you are receiving interest on that. That is inflow of money. So it is easy to recognize nominal account. One more point is, whenever the paid word comes, it is an expense. Say salaries paid, commission paid, discount paid, interest paid. So it is expense. Whenever received word comes, rent received, interest received, dividend received, it is inflow of money. So that is income. The next stage is, we need to write the journal entries in the standard pro forma. The pro forma is date, particulars, LF means ledger folio, debit rupees, credit rupees. So we need to write the journal entry in the particulars column, followed by narration. So one more important rule you need to remember while writing the journal entries in the journal book, that is 3 C's rule in accounting. The 3 C's rule in accounting is cash, check, credit. Cash means cash transaction, check means check transaction, credit means credit transaction. Suppose cash, whenever goods purchased, payment is made to the supplier, it is cash transaction, cash payment. Whenever goods sold to customers, we receive cash, that is cash receipt. So cash payments are there, cash receipts are there. So cash is acting as a mediator here. So only we write cash only. The second one is check. In place of cash, check. Check payments are there. Whenever we buy the goods from the supplier, we issue the check to the supplier. So that is check payment. Whenever we sell the goods to customers, we receive check from the customers. That is check receipts. Check payments are there, check receipts are there. Other than these two, cash and check, credit transaction comes into the picture. If neither cash nor check word appear in the transaction, that is treated as credit transaction. Suppose goods purchased from XYZ enterprise, there is no cash payment and no check payment happened here, so this is considered as credit transaction. Similarly, goods sold to customer ABC, goods sold to ABC, here no cash payment and no, we haven't received any cash and we haven't received any check. So this is called as credit transaction. So the next one, this is the practice problem 1. From the following business transactions, write the journal entries. So Mr. Srinivas commenced or started business with 1 lakh of cash on April 1st, 2021. For this transaction, we need to write the journal entry. So this is about solution I am providing. So we need to write the journal entries in the standard pro forma only. Date, particulars, LF, debit rupees, credit rupees. Date column, particulars column, LF column, small column. So theoretically, we need not write anything in this column. Credit rupees. So in the particulars column, we need to write the journal entry. The first transaction is Mr. Srinivas commenced or started business with cash. We need to understand this transaction. We need to read this transaction and we need to understand it. We need to identify how many accounts are involved in this transaction. Mr. Srinivas is a natural person, so it comes under personal account. Commenced or started business with 1 lakh cash. The 1 lakh is cash, even though cash word is not given, the 1 lakh is cash. So there are two accounts are involved in this transaction. One is a personal account, the another one is a real account. You can apply any one of the golden rules, either personal account rule or real account rule. So I am applying personal account golden rule. Debit the receiver, credit the giver. So Srinivas is the owner. Whenever owner starts business, the owner is considered as separate entity. Owner is separate from business. So Srinivas is indirectly a creditor to business. He has given 1 lakh of cash as a credit to business. So Mr. Srinivas is a giver. So we need to identify the Srinivas is a receiver or giver. In this context, Srinivas is giving 1 lakh as a credit to business. So he is giver. As for the personal account golden rule, debit the receiver, credit the giver. Giver always we should write credit side. If Srinivas account is showing credit side, the another account is what? Cash. So without applying this rule, directly cash can be shown debit side. So cash account is debited, Srinivas account is credited. Or else we can apply the real account rule also. Cash is a real account. Debit what comes in, credit what goes out. Debit what comes in, credit what goes out. So 1 lakh cash comes into business. Cash comes into business means debit what comes in. So cash should be shown debit side. So I am writing the journal entry. This happened on 1st April 2021. So 1/4/2021. The entry is cash account debit to Srinivas capital account. So Srinivas is the owner. So owner, he has brought down 1 lakh of cash as a capital. So we should write capital account. So immediately we should write the narration being business started. Being business started with cash. Why I am writing cash? Sometimes owner may bring any other properties into the business. Owner may bring his own land. Owner may use his own vehicle into the business. Owner may use his own building into the business. So here at the time we can also, if owner is bringing any other properties into the business, that can also be shown debit side. Then the amount of 1 lakh show debit side. How much cash is bringing? 1 lakh should be shown debit side. The 1 lakh of cash shown under the Srinivas capital account. So this is about the first journal entry. So with the help of golden rules of accounting, we can simply convert any other transaction which is related to business in the form of journal entry. So for second one is received cash from Mr. Ram. Received cash from Mr. Ram. So in this transaction again, cash is real account, Ram is a personal account. So we can apply any one of the golden rules. So I am applying personal account rule, golden rule. Received cash from Mr. Ram. In this transaction, Ram is giver, because we are receiving cash from Ram means Ram is a giver. So giver is always shown credit side. So what comes into the business? Cash comes into the business. So it means Mr. Ram is a customer. Earlier we might have sold goods to the Ram on credit basis. Now we are receiving cash from Ram. So this happened on 2nd April 2021. So again cash comes into the business. So cash account debit to Ram account. So we should not write Ram capital account here, because Ram is only customer. So we should not write Ram capital account, only we should write capital account for owner name. After owner name only we should write capital. If owner name is not given, we can write down owner's capital account. So being cash received, the amount of cash received from Ram 8,000 rupees. So amount corresponding debit 8,000, corresponding credit 8,000. So second one over. So moving to third one, issued check to Rahim. Issued check to Rahim. So again, check means, remember, bank. Don't write check either debit side or credit side as per the accounting rule. Check means we should write bank, because if check is given to you, so you will go to bank and you will deposit that check into the bank. So banker will credit that money to your account. So we have issued check to Rahim. So check means bank, personal account. Rahim is also personal account. So Rahim is receiver or giver. We have issued check to Rahim means Rahim is a receiver. We have issued check to Rahim means Rahim is a receiver. So receiver always should be shown debit side. So as per the personal account rule, debit the receiver. So Rahim account debit to, we should write bank account only, because we have issued check to Rahim. Rahim will go to bank. Rahim will deposit that check into the bank. Banker will pay that money. So banker is a giver. So giver is always credit, right? So we should write narration as being a check issued. The amount of check 7,500. 7,500 shown debit side, corresponding debit, and 7,500 corresponding credit. Next one, cash deposited into Axis Bank. Cash deposited into Axis Bank. So cash is real account, Axis Bank is personal account. Cash deposited into Axis Bank. You can apply any one of the golden rules. Axis Bank is personal account. Axis Bank is personal account. So we have deposited cash into bank means Axis Bank is receiving. So Axis Bank account should be shown debit side. Axis Bank account should be shown debit side. While we are depositing cash into bank, bank is receiver. While we are withdrawing cash from the bank, bank is a giver. So in here we are depositing cash into bank means bank is a receiver. So which bank? Axis Bank. If bank name is not given, you can simply write down bank account. So here bank account, bank name is given, so Axis Bank account is receiver, so Axis Bank account should be shown debit side. So Axis Bank account debit to cash account. So why cash account shown credit side? Because cash is going out from the business. So money we have withdrawn from business and we have deposited into the bank. So cash should be shown credit side. So being cash deposited. So being cash deposited, narration we should write like this, and the amount of cash deposited 10,000 and amount of cash we have deposited 10,000 should be shown credit side. Next one, on 5th, computer purchased from John Enterprises, Hyderabad, paid 30,000 rupees in cash. For these kind of transactions, any kind of purchases and sales, we need to apply 3C's rule. The 3C's rule in accounting is cash, check, credit. For any kind of purchases and sales, we need to identify the transaction is cash, check or credit. So if cash word is appearing in the transaction, that is cash transaction. Instead of cash, if you find check, that is check transaction, so we should write bank. If neither cash nor check words are appearing in the transaction, it is deemed to be instead of cash and check, if you find any name of the person or name of the firm, it is deemed to be considered as credit transaction. So the 5th transaction is cash transaction, because we have purchased computer from John Enterprises, Hyderabad, and we paid the cash immediately, so it is cash transaction. So when we purchase computer, what comes in, what goes out? When we purchase computer, what comes in, what goes out? Computer comes in, cash goes out. We need to apply the real account rule. So debit what comes in, credit what goes out. So computer comes in, cash goes out. So we should write computer debit side, computer account debit to cash account. So being computer purchased, the value of the computer 30,000, the next transaction sixth transaction, goods sold out to Mr. Satish Chandra and received check 25,000. Goods sold out to Mr. Satish Chan received check 25,000. So I already said to you that in case of purchases and sales, we need to identify whether it is a cash transaction or check transaction or credit transaction. We are finding check word, so it is check transaction. So we have sold out goods to Satish Chandra and received check from him, so he is a customer. So when we sell goods, what comes in and what goes out? When we sell the goods, cash comes in, goods goes out. In this transaction, we are receiving check only, so we should write bank. So we should write bank only, and we should not write goods credit side. As per the accounting rule, goods account should not be debited and goods account should not be credited. So instead of writing goods credit side, we should write sales account. So sales account always should be shown credit side. So this happened on 6th April 2021. So why we are writing bank? debit side, because customer is giving check, will go to bank and will deposit that check into the bank. Banker will make the payment to us. So banker will credit that money to our account. So we are receiving check, right? So bank account debit to sales account. So being goods sold out and received check. Check comes means that is the reason we should write bank account. The amount of check we received 25,000. 25,000. Next one, seventh one. Old machinery sold to Ratnam and received cash 5,000. Old machinery sold to Ratnam and received cash 5,000. So again here old machineries we are selling it and we are receiving cash from this person. So whenever we sell any other asset, here asset is old machine, so asset goes out, cash comes in. Something comes in, something goes out. So what comes in here? Cash comes in, machinery goes out. So as per the real account rule, debit what comes in, credit what goes out. So this happened on 7th April 2021. So cash account debit, we should write debit. So debit, old machine account. So narration is being old machine sold out. We sold out old machine and received cash. The amount 5,000. So next one, discount allowed or paid. Discount allowed or paid, this comes under nominal account. Whenever paid word comes, it is an expense. Discount allowed or discount paid is an expense. So we give the discount to customers. So discount paid is an expense. There is no cash word and there is no check words are appearing. So it is considered as cash transaction. So this happened on 8th April 2021. So discount account debit to cash account. So suppose discount allowed through bank is given. So whenever discount is given through check, so we should write, like whenever we pay the discount, we allow discount through check, we should write discount allowed account debit to bank account or discount account debit to bank account. So in this case, discount we are allowing through cash only. So discount is an expense, that is the reason discount account is debited and cash is going out. So being discount allowed. So amount of discount 500 rupees. Next one, ninth one, salaries paid to employees through check. Salaries paid to employees through check. So salary is nominal account and we are paying these salaries through check only. So check means we should write bank. So this happened on 9th April 2021. So salaries account debit to check means we should write bank only, right? So so bank account. Being salaries paid, if you want to write check only. Being salaries paid through check. If salary paid through cash, being salaries paid through cash. So amount of salaries paid through check 40,000 rupees. 40,000 rupees. And the last transaction for this question is furniture purchased worth 50,000. Furniture purchased worth 50,000. Again, whenever we are purchasing or selling goods or any other asset, apply 3C's rule. Is it cash transaction? There is no cash word. Is it check transaction? There is no bank word. Is it credit transaction? There is no cash word, there is no check word, there is no information about customers or suppliers. We purchase goods from suppliers only. Supplier information is also not available. So if no other words are appearing, no other C's are appearing in the transaction, it is considered as cash transaction. So whenever we purchase furniture, what comes in, what goes out? Furniture comes in, cash goes out. So debit what comes in, credit what goes out. So debit side we should write furniture. So furniture account debit to what goes out, cash goes out. So cash account should be shown credit side. So being furniture purchased. So here we have purchased furniture. So furniture account should be shown debit side, cash account should be shown credit side. So being furniture purchased. So likewise, any other transaction by using simple golden rules of accounting, you can convert in the form of transaction. Only one thing is that you should have the knowledge on these three golden rules of accounting. So personal account, real account, nominal account. Personal account golden rule, debit the receiver, credit the giver. Real account golden rule, debit what comes into the organization, credit what goes out from the organization. Nominal account golden rule, debit all expenses losses, credit all incomes and profits. So using these three golden rules of accounting, you can convert any other transaction in the form of journal entry. So if you have any questions, you raise the questions. So through my blogger, you feel free to raise the doubts through blogger. Thank you.